QuickBooks Pro Desktop 2021 Budgeted Balance Sheet Data Input. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're now going to be entering what we worked on last time in terms of creating a budget for the balance sheet and put that into our QuickBooks system so that we could run reports such as budget versus actual type of reports. This is the budget that we put together. If you don't have access to this, that's okay, because we'll just take this data and work on the data input process. If you want to look at how we put this together, you can take a look at a prior presentation to do so. We're going to go back on over. We're just going to do the data input so we can run those reports, including the budget versus actual. We're going to go to the company dropdown. We're going to go down to planning and budgeting. We're going to set up budgets. Now, it might take you directly to the profit and loss budget first, because we did that last time. If it does so, you want to create a new budget. Now, I've already created a new budget here, so it's already there. But you want to create a new budget, and then you want to make sure it's in the same year, 2021. And then you want to make sure it's a balance sheet budget as opposed to the P&L profit and loss budget. And then you'll say, okay. And you will then have two items down here. We've got one P&L, and then we have one balance sheet. So we can toggle back and forth between the P&L and the balance sheet. Now, you can do the same thing. You can increase the size of the column as you can in Excel. And so I want to work on February. January, we are imagining, has already passed. And then in the QuickBooks system, you may want to freeze the panes to kind of help out your workflow. So I'd like these names to stay the same when I scroll over. So what I'm going to do is go to the View tab, Freeze Panes, make sure I'm on cell B3, and unfreeze. I had them frozen already, and then freeze them. And then when you go to the right, you will see that it'll keep these columns here so I can concentrate in on February. Now we're just going to go back and forth from Excel back here. If you have two screens, again, this would be a lot easier with two screens, but we'll do some backtracking back and forth. So February, 105,134 is for cash. So there we have cash. Next, we've got the accounts receivable, the 9001. You might even hide cells too if you want to like really be easy on your eyes. Like I might go from H onto O and then say right click and hide those cells. And that way I don't, I'm less likely to pick up the wrong number, although I'm still pretty good at it. So I could totally do it if I want to, even if I don't want. Anyway, 9001. I don't do it on purpose to pick up the wrong number. But in any case, so that's going to be that one. Then we have the inventory asset 2052. So we're going to say, all right, this is going to be the 2052. And you can't really hit enter in here, or else it'll try to record the thing, so be careful. And then we've got the prepaid insurance, 11564. So we've got the prepaid insurance, 11564. Now note, if you miskey something, and it'll be out of balance when we run it, so we'll be able to figure it out once we run the report. So 12,000, so if I miskey anything, totally did it on purpose, so that we can check it. All right, 12,000. And then we've got the undeposited funds, 1577, 1577, 1577. Now, it might be off by rounding, too, so just be aware of that. We're going to be basically okay with that. Furniture and equipment. Now, this is the depreciation. Now, I think they want this in there as a negative. Notice I'm not going to put anything in the parent account. I'm going to skip that. This is 7500. I think they want a contra account in there, in other words, as a negative. So there we have that. We'll check that when we run the report. And then we've got the 98,000 in the equipment, 98,000. And then we've got the furniture and fixtures. So we're going to say the furniture and fixtures are going to be, now I think I put those in the equipment instead of furniture and fixture. Yeah, I did. So this should be -75 down here. And then the furniture and fixture, 98,000. We didn't have any equipment at this point. So I'm just going to delete this and delete that. All right. And then the accounts payable is going to be the accounts payable 0, and then the credit card 1051. So credit card 1051. Notice I'm not going to put these negatives. They're negatives in our thing because it's a credit, but they don't want the negatives here or credits represented. They're just liabilities. So 72,000 loan payable. So 72,000 on the loan. I think that's this one, so it's 72,000. And then they've got the payroll liabilities, 1739. So payroll liabilities is going to be 1739. Payroll 1739. And then sales taxes are going to be 1785. So sales tax, I'll put it in, I'll just put it into the parent, 1785. And then we've got the owner investment, 65,000. Owner investment, 65,000. And then we've got the equity. Notice you have to input the equity, 90,254. So 90254. And there we have it. Now we can do the same process all the way through December here, but the way I'm doing it with one thing at a time is a little bit tedious. So let's check this one first. We might do one more month of data input, and then we'll stop there for the data input so I don't torture you with data input. So we're going to say, note that we entered the owner's equity into draws. So it'll be in balance, but it's in the wrong account when we run the report. We will pick that up at the end of the presentation. So be aware of that. You could put it into the owner's equity, the proper account, or you can change it with us as we get to that point at the end of the presentation. Let's say save it, and then I'm going to say, okay, now let's just check the report to see if we're in balance. And if we're not, then I can go back and kind of adjust it. So I'm going to go to the reports drop down. We're going to go to the budget, and let's go to the budget overview. That should work. And I want to take a look at the balance sheet. So it should be on the balance sheet because that's the one we're checking. Finish this one off, and there we have it. So now, is it in balance, right? 231,828, 231,829. It's off by $1. That looks like rounding because we cut off the pennies when we did this. So I'm okay with that. If it bothers you that it's off by $1, you can obviously adjust any of these numbers. It's just a budget. So budgets are not exact. So you can put $1 somewhere to round it. But I'm okay with it. It doesn't bother me too much. So then next time let's put it in for February there, and I won't put it in through December, but you can continue the process obviously for the entire year based on what we have in Excel. So I'm gonna do it one more. Let's do one more month because data input's good times, and we want to continue with those times that are good as we go. So I'm gonna go to the company drop down. We're gonna go to the budget and planning, and we want to set up a budget, and it's on the balance sheet. Is it? We want the balance sheet. It put zeros and everything else now. So let's go to March. And we'll enter in for March now. So I'm going to go back to Excel, and again, for the data input, I'm going to unhide these cells. I'm going to put my cursor from E to P, right-click, and unhide. And then I just want March, so I can use my frozen panes and just go to the right a little bit just to see March. And then I can hide from G to O, right-click, and hide, so that we just have that one set of numbers, and I can enter it perfectly like we totally did last time. No mistakes. It was done really well, I thought. So then I'm going to widen up March. That's the one I'm concentrating on. So I'll make it really big. That'll make it easier. So I'm going to say, all right, now we got 11418. So I'm going to say cash is 11418. And then the next one's going to be accounts receivable 9453. Accounts receivable 9453, and then we have the inventory 2155. This is going to be 2155, and then prepaid insurance 12146, prepaid insurance 12146, and then short-term investment is going to be 12,000. So short-term investment 12,000. And then undeposited funds is going to be 1656. And then I think these two we're going to do them like at the same time because they shouldn't have changed. These two didn't change. So this is just going to be 7500 and 98000. And then the credit card. So the credit card, let's skip down to the credit card. It's 1104. So let's put that in as 1104. And then the loan, I don't think that one didn't change. That's 92,000. And then the payroll liabilities That's going to change. 1826, 1826. So that's going to be 1826. And then the sales tax is going to change. 1874. So it's going to be 1874. So we're at 1874. And then we've got the owner's 71796. Did that change? Owner investment, we had it change. Seems kind of unusual. Hold on a second. I don't think that one should be changing. I'm gonna adjust it here. I don't like that. It's because I don't think that's gonna change. So I'm gonna say this will be the same. I think it would be better. So we're gonna have the $65,000 for the owner investment, and then the total equity. Then the total equity, which should be down here. I have it in draws. Should be the 96526, and this 90,000 should be down here to 90254, not in the draws tab. And then I'm going to remove the draws, and so there we have it. So that should tie out to what we have here. So in March, 96526. Now let's just check if we're in balance. So I'm going to say save. I'm going to close this, and we'll run the report. Then next time we'll actually generate the reports and print them and whatnot. But just let's take a look and make sure we're in balance by going to the reports drop down. We're going to be taking a look at the budgeting report, which is second to last item. And I just want to look at the overview report. We want to make sure we're on the balance sheet. So the balance sheet report, and OK, and finish. And so we're going to take a look at March and see if we are in balance. So notice we're way out of balance here. So something's wrong with that one. So notice the balance sheet will not, here I'm going to pull out the trusty calculator here. Notice the balance sheet will not be in balance automatically. QuickBooks will not force us to be in balance. So this is not just rounding. So let's see what the difference is. This is 238,330 minus the 139,328. And that's going to be 99,002. Now, if I look through it and say, okay, I could compare then section by section to what's on my balance sheet over here. Like I can compare all the assets, for example, highlighting all the assets, which would be down to here, should be the 238,328. And if I go back to QuickBooks, that's not the case, right? And then if I go up to my cash, it's obviously cash is a problem, which should be, it should be 110418. So here it's I missed it a 0. So let's go back on over. That's kind of a big 0, big difference. So let's go into the company and financial, and we're going to go to the planning and budgeting and make that adjustment. So I'll go to the budget setup, and then I'm going to say this is 110418. 110418. So I'm going to say save that, okay. And then if I refresh that, so now we're at the 238,328 versus the 238,330. So if I subtract those two out, then it looks pretty close. 238,328 minus the 238,330, 238,330. It's going to give us a $2 difference. So that looks like rounding. That looks close enough. That looks pretty good. So that's where we're going to stand. So that's the data input at this point. We won't continue entering the data for the rest of the year here. You could continue to do so, but we're going to stop it there so we don't overdo the data input. Next time we'll run our reports like this again, and we'll run the other report, which is the budget versus actual report, and we'll talk about how we can present those reports, export them to Excel, put them on one PDF file, and so on and so forth.